Hello ladies, and welcome back to my channel. If you are new here, welcome, and if you are a returning subscriber and get bona girl, I acknowledge you. So over on this channel we talk about personal finance, adulting, and just living life meaningfully. In the previous two videos we chatted about how investing in shares works, as well as when is the right time for us to actually start investing in shares. And now finally in this video we're going to be chatting about where exactly we can buy these shares, zithengiswaphi, especially in the South African context. Let's get into it. Now, we all know that shares of public companies are listed on a stock exchange, like the Johannesburg Stock Exchange. However, we can't just pitch up at the doors of the stock exchange and be like, hi, ndisazothenga shares zakwaCapitec. We have to go through a middleman, and that middleman is typically known as a broker or a stockbroker. So in South Africa, we have three main ways of buying and investing in shares. The first is that we can invest in shares via an asset manager or an investment manager. We can buy and invest in shares through a stockbroking platform. And we can also buy and invest in shares by going directly through a stockbroker. Let's chat first about investing in shares through an asset manager. In layman's terms, an asset manager or an investment manager is a company that manages the investments on behalf of clients. They typically take a client's money and invest that money into assets including shares, property, bonds, foreign currencies, etc., whilst also managing risk. We have specialized asset managers which manage typically the assets of very high net worth individuals, aka managing the assets of the rich. And then we have more mainstream asset managers which pull money from a variety of different people and then collectively invest that money. These are the types of managers that the typical man or woman on the street like you and I would have access to. Typical examples of these types of managers in the South African context are companies like Coronation Fund Managers, Allan Gray, Investec Asset Management, Sanlam, Stanlib, and many more. Now, the most common way that you can invest through these asset managers is by buying into one of their unit trust funds that they create. A unit trust is a collective investment scheme that is best understood to be a basket of different shares, and in some cases even different asset classes, that are put together to form a fund. And you are then able to buy pieces of those unit trusts or those funds. And by buying a piece of that unit trust, you are essentially then investing in the underlying assets which make up that fund. So let's look at Coronation Fund Managers as an example. Please note that I'm not necessarily telling you to go and put your money within Coronation. I'm just using it as an example because I used to work there, and so I understand their funds a little bit better than I would other types of managers. So you can see that under the funds or the unit trust fund that Coronation has, they are split into South African funds. And if you scroll all the way down to their fund range, you can see that they also have international funds, which are made from international assets. And then within their South African funds, you can see they have long-term growth unit trust funds, they have income and growth income, as well as building block unit trust. For example, you have a unit trust fund that's purely made out of industrial assets, one that's made out of shares from purely financial services companies, a unit trust made purely from bonds or mainly from bonds, as well as even equity, if equity is something you'd want to invest in. So let's look at one of the long-term growth funds, particularly the top 20 fund at Coronation. So when you click on this page, it will kind of give you the information that you need to know as an investor about this particular fund. It will give you the fund description, exactly who this fund is particularly meant for, the type of investor it's meant for, the benchmark which it is compared against, as well as the actual fund managers who manage this fund on a month-to-month basis. And then it will also show you the fund's performance against their benchmark. So for example, this fund here has provided an average 16.1% return since the year 2000 when it was launched. When you click on fund fact sheets, you are then able to get much more detail about the fund. So it will tell you when the fund was launched, the size of the actual fund, its net asset value, the benchmark which it is compared against, and it will also provide you with the performance as well of the actual fund. You can also see what the top 10 holdings of this fund are. So in this fund, we can see they've got NASPA shares, British American Tobacco, Anglo, there's some Standard Bank shares in here, ShopRite, Aspen, Netcare. And this kind of tells you that of the 17.5 billion rand that makes up this fund, 16.4% is invested in NASPAS, 10% in British American Tobacco, 9.7% in Anglo American, and then you can see that 6.1% is invested in ShopRite. And this kind of gives you the information which you need about these funds. So you see that by investing through an asset manager, like let's say Coronation, you get the benefit of diversification because there's actually quite a large number of shares that typically make up a share-based unit trust. And this type of diversification you might not necessarily be able to attain by yourself if you were to directly buy these shares on your own. You also get the benefit of very rigorous risk management that is done by the portfolio managers and the finance professionals who create and manage these funds. We can also see that by investing through asset managers, there's typically very low barriers to entry. Sometimes you only need about 500 Rand in cases like Coronation and Allen Gray, and in other asset managers, you only need about 100 Rand a month to be able to start investing. However, when you buy into unit trust, you typically don't get to decide which shares are bought and sold and the time frames under which they are bought and sold. It is the fund managers and the finance professionals who put together and manage those funds who make those decisions for you. And I don't know about you, but I would much rather let the professionals make those decisions instead of me making them for myself. Now, the second way to buy shares within the South African context is to buy them through a stockbroking platform. A stockbroking platform, also known as an electronic trading platform, is a legally registered software that enables investors and traders to place trades and monitor their investment accounts. So on a stockbroking platform, you typically create an account, go through a FICA registration process, and then once you have gone through that registration process, you are then able to buy and sell shares according to your liking. A popular stockbroking platform used by retail investors like you and I in a South African context is a platform called Easy Equities and is owned by the Purple Group. However, there are quite a few other platforms within the South African context, and I know that Standard Bank and Investec both have such platforms. I really encourage you that before you start utilizing a platform, please do thorough research on it to find out its legitimacy. On a stockbroking platform, you are able to buy and sell shares according to your own liking. So unlike investing in shares through an asset manager, you essentially become the stock picker, and you also get to decide how long you hold shares for and how quickly you sell them. Additionally, on these stockbroking platforms, you don't only get to buy and sell individual shares, but you also often have the opportunity to buy into exchange traded funds, which are similar to unit trust. However, the units of these funds are actually sold directly on a stock exchange. And similar to unit trust, ETFs, exchange traded funds, also give you the luxury of diversification, even if you're starting off with a small amount of money in your investing. Stockbroking platforms do tend to be significantly cheaper than going directly to a stockbroker. However, please do your research before you start using a stockbroking platform and before you start putting your money in there. The third way to buy shares in the South African context is to go directly to a stockbroker. A stockbroker is a registered financial services provider, typically a company that is able to buy and sell securities on a stock exchange on behalf of clients. Similar with a platform, when you approach a stockbroker, you will have to go through the FICA registration process, and once you have completed that process, you are then able to instruct your broker to buy and sell shares for you on the stock exchange of your choice. Most of the time, stockbrokers also have financial advisory departments, and so you are often able to actually receive advice as to what type of investments to make at which point in your life. However, this is a service that you typically will have to pay for. Each one of the mechanisms of buying shares within a South African context that I've mentioned have their own fees associated with them. And it's important for you to do your research and to actually understand these fees before you start putting your money into them. I do want to reiterate that investing via a stockbroking platform as well as via an asset manager, from my own experience and research, is relatively really affordable. However, I cannot provide an opinion about the prices charged by stockbrokers because I haven't had an experience with them, and so you will have to do that research for yourself. Please note that regardless of which route you take in order to start investing in shares, you will have to go through a FICA registration process, similar to the one that you go through when you open a bank account at the bank. This is something that is required by the law and is necessary to ensure that there's no money laundering or financial crimes that are happening through your account. The FICA process typically requires your ID, it requires a proof of your banking details, as well as a proof of your actual address, and it sometimes even requires some level of transparency about the source of the funds that you are investing. I do hope that this series about investing in shares has been valuable to you, and if it has, please go ahead and give this video a thumbs up and consider subscribing to my channel. It really supports the channel. If you have any questions or comments or even content ideas, please leave them in the comment section below. I do respond to every single comment, so I would really love to hear from you. Thank you so much for tuning in, guys. Bye.